Hi, my name is Alexandre Kech. I'm the CEO and co-founder of Onchain Custodian, an insured digital asset custodian incorporated in Singapore. Today's video is a recording of a webinar organized last week as part of our virtual exhibition booth campaign. We cannot meet you at conferences, so we meet you through social media. The topic, the digital asset industry will fail if it does not standardize and harmonize. Listen to know why and what are some of the initiatives worth getting involved with. Welcome everybody. So we having this session on standardization and harmonization because it's a topic that is not very much covered in the digital assets space, especially. It's a new industry, it's innovative, it's growing from multiple ideas in different directions, and there are initiatives to standardize for sure, but not everybody knows about those initiatives. And I thought it would be a good idea to have an info session about some of the industry collaboration out there and why they exist and what they will bring to the digital asset industry as we go. For those who are in the digital asset space, we all believe that the future will look like this. We believe that the industry, any value, be it cryptocurrencies on blockchain, but also fiat currency, bonds, shares, even gold, real estate, any assets that has value, we believe it will be tokenized on blockchains, and I'm using the plural on purpose. Blockchains that hopefully at that time will be all interoperable and will lead to access to tokens representing that value that can be exchanged with one another, paid for one another, or invested. These tokens will be made available to families, individuals, corporates, and other companies. They will either have the choice to hold those tokens themselves directly on their computers or on wallet services offered by mobile providers, or they will be using digital banks like Onchain Custodian and others who will be there to secure those digital assets and prevent users who don't want to deal with a private key to have to deal with private keys. And these tokens, we believe, will be usable for many things, like money is used today. Those tokens will be interchangeably usable as collateral for a loan, as an investment vehicle, to buy groceries, to buy tickets online, to get miles from airline flights and transform those miles into fiat currency, tokenized fiat currency, and change and use it to pay your gas, like it's possible today with KrisFire Miles, for example, on the blockchain. It will also be used, maybe, why not, for paying taxes to the governments. How long will this take? 5, 10, 15 years? Nobody really knows, but for those who are in the tokenization space and the digital asset space, we all believe that it will happen one day. But in order for this to happen, there's a standardization challenge that needs to be solved. Not only one, multiple ones. Interoperability between different blockchains. Today, there are probably hundreds of different blockchains that operates like little islands with their own ecosystems that do not talk to one another. There is the challenge of semantics. So today, digital assets, digital tokens, cryptocurrency, crypto tokens, even the meaning of terms in our industry is still being discussed and has not come to a common understanding, let's call it this way. And then you have on the token side itself, so how you identify your digital assets, myriads of ways to identify those assets by a ticker, by an identifier, but all proprietary at this stage. And I'll cover some initiatives that aim at standardizing the identification of the tokens itself. Just to take an example, Bitcoin, the most well-known and first digital assets on blockchain ever, is known as BTC on some exchanges and XBT on others, and even other terminologies. So standardization is a challenge, and there are initiatives in the industry that looks at harmonizing market practices as well as standardizing the industry. At different level, at business layer level, at technological layer level. I will not be able to cover all those initiatives today, but I will try to explain a few of them, initiatives that we participate to as with Onchain Custodian. Therefore, we know what they are about, and hopefully that will give you an idea that this industry is organizing itself as the traditional financial and banking industry has organized itself over the years to be more efficient through standardization and harmonization. We will cover GDF, which is the Global Digital Finance, an industry group looking at code of conducts and market practices. We will look at ISO and some of the initiatives there around digital assets. We will look at a joint working group for interVAS messaging standards, which looks at the FATF travel rule requirements and how beneficiary and ordering customer information should be exchanged in the context of cryptocurrency and digital assets in general. And we'll look very briefly at securities token classification, where the BSI, British Standardization Institute, has an initiative going there. Let's start with GDF. Some of the faces on the screens are people who are participating to GDF, either as a steering committee members or are co-chairs of working group. And I will focus today on the custody working group of the GDF, because it's the one I'm co-chairing and I know best, but there are similar and other working groups in GDF looking at other aspect of our industry, like stable coins, like exchanges, like securities token issuance. Custody is obviously looking at digital asset custody. And this working group also worked on ISO 222 APIs for token transfers, because we believe that customers of custodians should be able to communicate with those custodians to instruct to move assets on blockchain using a similar language, in this case ISO 222, and APIs, a similar technology. So the custody working group of Global Digital Finance has really, like all GDF working group, the objective of establishing code of conducts. In absence of regulation or in lack of sufficient regulation on how this industry should be operating, the GDF aims at self-regulating, having the industry itself build code of conducts and to ensure that we behave properly as an industry towards our customers, towards our investors. And the group co-chaired in this case, and the custody working group co-chaired by myself and Hervé François from ING, has been looking last year and the year before and this year at the creation of a code of conducts that looks at different aspects of practices that all custodians should be following to make sure that we serve the industry as we should. We distinguish between custodian and non-custodial wallets. So the code of conduct focus on custodial wallets. So custodial wallets are service providers like Onchain Custodian and others that provide a service of custody of digital assets, meaning that the custodian has full or partial control of those assets with the customer and operates some asset servicing activities around those assets. It's closer to what traditional custodian would do. On the other side, you have non-custodial wallets who are more technological solutions, providing ways for all holders of assets to hold their assets themselves, but in a secure environment. These are not part of the code of conduct because they are technology solutions and would generally not follow similar rules than a service providers like a custodian. So the code of conduct is split in 4 different sections. And I invite you to look at it if you're interested on gdf.io. We have chapters around regulatory compliance, legal, technical, and operational. On regulatory compliance, as it is early stage in terms of regulation, it aims at sharing of basic principles about how custodians, in our view, should be operating. KYC, AML, CFT compliance, obviously, is an obvious one. Contract law. So obviously, if you have laws in place in your country around contracting with customers or consumer protection and criminal law, you should be following those principles. It sounds obvious, but in a new industry, looking at assets that has a value, that's not always a given. Often players coming into that space are not familiar with all those rules because they are not from the traditional banking and capital markets industry, and they sometimes tend to omit the basics about having the right contracts in place with their customers and the right transparency, for example. And that's the next point, legal. The code of conduct is citing and listing a certain number of what I call transparency criteria or transparency principles around who the company is, what licenses the custodian has, what insurance coverage it has, what type of assets he supports, the risks controls, for example, what BCP is in place, for example, in scenarios like the COVID-19. All this should be transparently available to the customers as part of the code of conduct principles to ensure that the customer knows what who is working with. Technical, of course, without going into specifically mandating types of technology to secure digital assets, it at least lists some principle about, for example, ensuring that the latest security measures are always in place, that there are some rules and an explanation and transparency about how private key are managed. There's also some needs to ensure there is no collusion possibilities among staff of the custodian that would enable them to steal assets, for example. And then on the operational, and that's probably where custodians makes a difference vis-a-vis technological solution or vis-a-vis self-custody, is the establishment of sound checks and balances, procedures, reporting, segregation of account, operational risk management, auditing, BCPs and backups, etc., that custodians would have to put in place to be considered as an enterprise grade and institutional ready type of player. The group also worked, as I mentioned earlier on ISO 20022 APIs. So the whole idea came from the fact that multiple custodians have often the same customers. For funds, crypto funds, for example, they would generally use 1, 2, or 3 different custodians to diversify their risk or to mitigate the risk through diversification, rather. And they are today confronted to the challenge of having to communicate with different sets of APIs with each custodians they use. So the idea there was to create a standard set of APIs that can be leveraged by the player. I'm having a chat. Okay, so questions are already coming in. I was afraid I was not being heard. APIs that would help customers connect to multiple custodians in the same way. So we've worked with Swift on this because they are the registration authority for ISO 20022 and they have the knowledge. That's why you saw the picture of Tom Allards on the first page, who have the knowledge, and they've helped us define an API, a set of APIs that we can send after this meeting to those who are interested to manage requests for transfers and confirmation of requests, as well as status query and status responses. This is obviously not to communicate with the blockchain itself. The custodians would be connected through a node to the blockchain. It's for communication between the customer and the custodian. It could also be used for customer to exchange communication and for custodian to other custodian communication. So you would wonder, okay, this is nice, custody working group at GDF, but what type of membership is present, or what type of participation to the various discussions are we talking about? Well, it's actually quite varied. You see technical or crypto custodians like Onchain Custodian, Coinbase Custody, Crypto Storage, or Credo, or, for example. But you also see technological so you can also see some technological provider like Securosys, Ledger, and others. And you see traditional players like ING, the co-chair, Hervé François from ING, HSBC also, DBS, Citibank. So players that are not yet into digital or not yet into the digital asset space or the crypto industry space, but are looking seriously at it or are proof of concepting about it and wants to ensure that the standards they use in the traditional world are also replicated and used in the new world of digital assets. Now let's look to the next. So maybe I'm going to pause here. Well, no, I don't think if I pause, it's going to be a bit complicated. So I'm going to cover everything, and I think it's better at the end to have all the questions. I will have 4 chapters. The next initiative is about the ISO TC68 SC8 Working Group 3. Sorry for the soup of letters and numbers, but it's, in other words, an ISO working group looking at standardizing digital token identifiers. So you see some of the members there or support staff from, for example, Bloomberg, or also from SWIFT, or from the Chinese Standardization Institute, for example, and Anna as well, who is issuing ISIN or is managing the ISIN standards, and so on and so forth. You even have someone from the Federal Reserve Bank of Minnesota in the US. So it's a varied group of experts from the traditional and digital asset space looking at tokenization of assets and how they should be identified. So the group has come up with the ISO standards called 24165, which is at currently committee draft stage. So what does it mean? Is that it's the draft of the standard has been produced, it has been voted on, and the vote was positive. So we're going to the next step, which is about creating a registration authority for this DTI standard, and going to final draft international standards stage for hopefully implementation in Q1, Q2 2021. This standard aims at very simply provide the framework to create a unique identifier for any digital assets issued on a blockchain, and any meaning, in this case, any fungible digital assets issued on blockchain. We don't look at non-fungible assets, only fungible assets are covered here. With not only will it create a identifier, a string of character, random 8 alphanumeric character plus a check digit, but it will also create what we call a technical fingerprint for that identifier, for that token, sorry, through a set of sets of specifications that needs to be registered at the same time than the token before the identifier is issued, that will uniquely identify this token on the various blockchains it's used. There will be a registration authority taking care of that tasks, and it's currently being, it will soon be launched as an RFP will soon be issued for those who are interested to become that registration authority. The codes will obviously be publicly available and will be used to by regulators, exchanges, custodians like us, asset managers, tax authorities, why not crime and anything that is about avoiding fraud in this space, to identify uniquely any assets that are issued on the blockchain, with only one exception: not central bank issued currency. So for that, the ISO currency code standard that already exists, used for example, to identify dollar by USD or euro by EUR or Singapore dollars by SGD. These standards will be used, we anticipate, to identify any central bank issued currency in the future. So no need to have another standard to identify those tokens. There are, for those who would have questions about the overlap with ISIN, yes, securities token would potentially get a DTI and an ISIN. Some securities token might have one ISIN and no DTI, or could have one ISIN and multiple DTIs because this securities is issued on multiple blockchain, for example. So all this is catered for into the standards, and will be to ensure that if there is an overlap between identifier standards, it's clearly understood why and how it can interoperate. Other ISO standards, just briefly, that are looking at blockchain and digital assets. I only listed a few of them. For example, the ISO 22739, it's about semantics and fundamental terminology. We are using it in the DTI standards to define the terms and that we're using in our standards with regards to digital asset and blockchain, for example. Very nice standards. That is at approval stage now. The ISO 23245.2, don't need to remember all those numbers, but it's about security risk, threats, and vulnerabilities on blockchain. Privacy and personally identifiable information protection considerations for the ISO 23244. And for example, security management of digital asset custodians, which I should have a look at for sure, ISO 23576, which is at committee stage, or very early stage. But you see, ISO is looking at this space, is trying through their members to set up the right standards to work with blockchain and distributed ledger technology in the digital assets, and it's a good news for the industry. It's a non-exhaustive list, as I mentioned. And there is also good standards, existing standards that are being reused. I mentioned already ISO 222 for building APIs around the transfer of digital tokens or digital assets by custodians. But ISO 222 is also used in another context that I will share a bit about later with regards to communicating beneficiary and ordering customer information between crypto players to comply to the travel rule recommendation of FATF once implemented into legislation. And then another one that is also being used in the standards I just mentioned, and I cover a bit later, is the ISO 17442 LEI, Legal Entity Identifier. This is a very good international standard aiming at identifiers legal entities. It is there available. A lot of industry initiatives in the digital asset space are looking at using the LEIs to identify corporates in the space of digital assets. And this is what a LEI look like. And guess what? This is the LEI of on-chain custodian. So if I'm talking about standards and promoting the use of standards, we should, as a company, also ourselves use that standard, and that's what we do. We use in this case, the Bloomberg LEI portal to request the issuance of a LEI for on-chain custodian. And I would encourage any legal entity on this call who are in the digital asset space to do the same. It's very cheap and very efficient. This request was done in less than a day, and it allows you to demonstrate to the authorities that you are willing to be identified first in this digital asset space for everything that requires around compliance and licensing and transaction management, AML, CFT, and so on and so forth. Very quickly on this one, because it's still a work in progress, it's a securities token and classification. So it's looking at how beyond the CFI existing standards, so the classification of financial instruments standard that already provide a classification of securities, for example, based on their business attributes. This is looking at how technical attributes can be added on top of business attributes to further describe a securities token when it's issued. It's a BSI initiative. It's a working group at this stage. I cannot mention more about the fact beyond the fact that it exists. And these are some of the members from the traditional industry, as well as the crypto industry. And the initiative is run by this guy on the left, Adam, with a lot of help from Thomas Borrell from Polymath. Polymath is a securities token issuance platform. I'm just participating occasionally, not as strongly as other working group. And finally, but very importantly, a standard that has something to do with compliance and regulation. This joint working group is working around on establishing an inter-VASP. VASP is Virtual Asset Service Provider messaging standard, or data standard rather, for the exchange of the information required by the FATF travel rule recommendations. And that would will likely be, have been or will be implemented by regulators across the world in this year and next year. These are some of the working group members, also a mix of different types of players from the traditional and the new industry or the digital asset space. The group are, it's sponsored by the Chamber of Digital Commerce, GDF again, and IDAXA is a group of exchange, industry group of exchange that has been created after the last G20, I believe it was in Japan, where the digital asset industry also gathered to contact FATF and try to find ways of fighting AML, well, money laundering and financial terrorism through means that make sense to the digital asset space. As I mentioned, these are the parties that are participating, at least co-sponsoring. There's about 109 technical experts. We have had phone calls every week for 2 hours at various different times to ensure the Americas, Europe, and Asia would be able to join. The objective is to be cross-industry, cross-sectorial. It's a mix of virtual asset service providers, so exchanges and custodians, with also technology providers, academics. There's representation from the GLIFE, for example, who's managing the LEI standards, supervisors, regulators, and so on and so forth. It aims at creating a universal common language for communication of required originator and beneficiary information between the VASPs as per requested by the travel rule. It's establishing a data model, and I can reassure those on the call that this data model has been mostly, well, very much influenced by the ISO 22222 data model, and with a few exceptions that were very specific to the digital asset space, the data standard is very, very similar. It is a data model, as I mentioned, but it's not a technical solution or even an implementation or a protocol. It really aims at providing the right tools and data elements for service providers out there who are working on solutions to build something that is standardized across solution and, most importantly, interoperable. The challenge of the travel rule is that if I need, as a custodian, to start sending for each transaction for each transfer, my beneficiary and ordering customer information, I don't want to have to subscribe to 25 different services to be able to reach all virtual asset service providers around the world. I want to be able to do that via 1 or 2 service providers, asking for the same data in the same format. And that's what this IMVS standard will be doing, is providing that data structure that can then be implemented and transferred in a harmonized way from VASPs to VASPs. The timeline of this initiative, we are actually at the very end, right here. We will have next week a plenary where we will, it's on the 6th of May, not on the 8th of May, where we will sign off the work that has been done for many, many weeks. Hard work, I can tell you, but very useful work. And then after submission to the participating industry bodies for approval or vetting, they will be for sure a report to the FATF plenary meeting in June, if it's still happening, to explain the outcome and get their feedback and support. So the desired outcome of this initiative and benefits, obviously, is to be used by VASPs globally, regardless of the technical solution. I just mentioned that. Consistent and harmonized. Unambiguous data, we know what we're talking about. The mitigation of fragmentation of solution, as I mentioned again. Reducing costs and minimize risks, of course, for the reporting or for the entities that needs to transfer that information, or to at least store and in a standardized way, and so on and so forth. And of course, for the regulators, the benefit is a more rapid adoption of travel rule solutions. So I'm done with the main presentation on the various standardization and harmonization initiatives. I will now go through a little introduction of Onchain Custodian, as some of you might not know who we are. This is a very good summary of who Onchain Custodian is. A team of 4 co-founders, experts in blockchain, banking, and capital market, getting together in 2018 to build a team, a platform with the best partners to offer the best custody solution for institutional players and qualified investors. We've worked with IBM on our recent release of our warm wallet solution. We've built the best compliance tools with KYC partners Acuity and Merkle Science. We're currently applying for the PSA license with our partners Linklaters. And as mentioned during this session, as we grow our business, we also contribute to our industry through memberships in various industry groups working on harmonization and standardization. Cherry on the cake, we won in 2019 the FinTech Award First Prize for Singapore Founder Startup. Our stakeholders, Sequoia, DHVC, and Fosun, ensures that we have the right capital to progress into our project. We provide a secure single window access to digital assets and open finance services to a variety of clients, be it asset managers, crypto exchanges, family offices, high net worth individuals, or trustees who are using our wallet service solution, either the cold wallet, the warm wallet, or a combination of both, to manage their assets and their transactions safely. We also provide through curated partners open finance services to allow our customers to deploy their assets in lending and borrowing products or asset management products, to also cash out their digital assets and get US dollar against their cryptocurrencies, for example, if they need to. Partnerships are key to Onchain Custodian. We believe that we are strong in what we're doing in custody, but we don't think we can do everything on our own. And we are partnering with the best curated partners to offer the open finance services I mentioned previously, or to build part of our technology or our compliance components. As shared earlier, the version 2 of our platform that we launched this year, offering warm wallet services and transaction management services, is secured by FIPS 142 Level 4 certified HSMs, hardware secure modules. These are the best you can find globally, the most secure, the more tamper resistant. We've done that because we believe that working with technology partners like IBM, with the history of security and knowledge they have in securing environment, will make our new industry at the enterprise grade level it deserves to be. I thank you very much for your attention. Feel free to contact us on contact@oncustodian.com. If you want to know more about the standards initiatives that I mentioned at the beginning of our presentation, or if you want to know more about our services. Have a great day.